Hey there, welcome to our latest episode where we're going to chat about the freshest news on Bitcoin. We'll start off by talking about Dimon's Bitcoin exit, and then we'll get into the correlations between different cryptocurrencies and Bitcoin's ETF surge. We'll also fill you in on the Coinbase SEC face-off, Gemini's exciting French venture, India's economic outlook, and the recent crypto heist. And of course, we can't forget the latest on Ripple's valuation, Schwartz's statements, Ripple's surge, and the recent XRP surge. So grab a cup of coffee, get comfy, and let's get into it. Quick reminder, the information provided here is for news purposes only. Always consult with your licensed professionals for personalized advice. JP Morgan Chase CEO Jamie Dimon is back in the crypto spotlight, and guess what? He's saying he's done talking about Bitcoin. Yes, you heard it right. I don't care, he boldly declared at the World Economic Forum in Davos. Dimon, a longtime Bitcoin critic, compared Bitcoin to a pet rock. Ouch. But he did acknowledge the potential of blockchain technology, calling it real and efficient. Now, while he may dismiss Bitcoin, he did make a point about a specific class of cryptocurrencies. Dimon drew a line between Bitcoin and smart chain enriched blockchains, highlighting the latter's potential to tokenize real estate and move data through smart contracts. He believes these cryptocurrencies might actually do something, but when it comes to Bitcoin, according to Dimon, it does nothing. Interestingly, he defended the right to use Bitcoin, acknowledging real use cases, including combating fraud and tax avoidance. Still, his personal advice, don't get involved. Strong words from a man who's been consistent in his skepticism. Moving on to recent developments, Bitcoin's status as an asset class got a significant nod from the SEC, approving the creation of Bitcoin exchange-traded funds, ETFs. This is a game changer, with big players like BlackRock, Franklin Templeton, and WisdomTree launching their own spot, Bitcoin ETFs. The floodgates are opening, and analysts predict substantial fund inflows in 2024, ranging from 50 billion to 100 billion. Exciting times ahead for the crypto market. Listen up. Now, we've often viewed Bitcoin as an alternative asset, independent of traditional stocks and bonds. But guess what? There's a twist in the tale. According to Kevin Davitt, head of options content at Nasdaq, Bitcoin and the Nasdaq 100 index, represented by QQQ and QQQM ETFs, share a notable correlation of 0.805. That's a significant link, but hold on, it's not always a steady ride. History reveals intriguing shifts. In late 2019 and mid-2021, the correlation dipped to 0.65. That's when Bitcoin and Nasdaq moved in opposite directions, opening up opportunities for savvy investors. But here's the plot twist. Recently, they're dancing in harmony. The 90-day correlation between Bitcoin and Nasdaq has been on a roller coaster, swinging between 0.64 and above 0.99. What's causing this tango? Well, it could be the US approval of spot Bitcoin ETFs, or a reflection of QQQ and QQQM holdings being seen as crypto correlated. Why does this matter? QQQ and QQQM allocate a significant chunk to tech stocks, some with ties to crypto. As Bitcoin is considered a technology, this correlation isn't surprising. What does it mean for traders? An ever-evolving market with potential opportunities. Whether you're a tactical trader seizing moments of divergence, or a conservative investor seeking exposure with less volatility, there's room for everyone in this dynamic landscape. Let's take a moment to explore this. SEC approval was huge for Bitcoin ETFs, but the world's biggest just got a far more important win. Yes, we're talking about Grayscale Bitcoin Trust. After a roller coaster in 2022, Bitcoin made an impressive comeback in 2023, more than doubling in value. The turning point, the anticipation and subsequent approval by the Securities and Exchange Commission, SEC, for 11 spot Bitcoin ETFs on Jan 10. Now, why is this particularly crucial for Grayscale Bitcoin Trust? Well, this long-standing crypto investment giant, previously an unregistered fund, has now officially transformed into the world's largest Bitcoin ETF. But the real game changer is not just about approval, it's about retaining its leadership amidst new competitors. Before this ETF status, Grayscale Bitcoin Trust faced challenges: a high expense ratio of 2% and no redemption rights. However, with the SEC's move, it became a true ETF, eliminating these drawbacks. The result? Grayscale Bitcoin Trust has not only maintained its status, but emerged even stronger. The early days post-conversion reveal a stable landscape. Grayscale reported 690 million shares outstanding as of Jan 12, with a total value of $26.9 billion. The small movements of actual Bitcoin from the Grayscale ETF suggest that, for now, it's holding its ground. However, the competitive terrain is heating up. While Grayscale has advantages, including being the first in the game, competitors offer lower expense ratios. Will cost-conscious investors shift? That's the million-dollar question, and it's a story we'll be watching closely in the coming months. Get ready for a dose of this. Coinbase, the behemoth of crypto exchanges, is gearing up for a courtroom clash with the U.S. Securities and Exchange Commission, SEC. Why? Well, Coinbase argues that the SEC should drop its case, asserting that the tokens on its platform are not securities. This legal tussle is pivotal, potentially defining the SEC's authority over the entire digital asset sector. Coinbase is throwing down the gauntlet, contending that crypto assets are fundamentally different from traditional securities like stocks and bonds. It's a bold move, challenging the SEC's jurisdiction. As the world's largest publicly traded crypto exchange, Coinbase is set to make its case, asserting that the SEC has overstepped its boundaries. The argument revolves around the idea that the assets they trade aren't subject to the same oversight as traditional securities. And they're not alone in this perspective. Other crypto firms share similar sentiments. Let's rewind a bit. The SEC filed a lawsuit against Coinbase last June, alleging that the platform allowed trading of certain crypto tokens that should have been registered as securities. The SEC claimed Coinbase operated illegally as a national securities exchange, broker, and clearing agency without proper registration. The lawsuit also took aim at Coinbase's staking program, calling for its registration. This program involves pooling assets to validate blockchain activity, offering rewards to customers. Coinbase argues that the SEC's grip extends too far and that this program doesn't fall under its regulatory purview. Now, this legal clash is part of a broader pattern. The SEC has been flexing its muscles, bringing lawsuits against various crypto entities. Initially targeting companies selling digital tokens, it has now widened its focus under Chair Gary Gensler. The crypto industry argues for legislation to regulate this dynamic space. Coinbase's move echoes a similar case involving Ripple Labs, where a judge ruled in favor of the crypto sector. Coinbase sought a dismissal in August, citing this precedent, but the SEC insisted the case should proceed. The stakes are high, and the outcome could have ripple effects throughout the crypto space. Brace yourselves for this one. Gemini, the crypto exchange founded by the Winklevoss twins, has received the green light to launch in France. An exclusive update from CNBC reveals that Gemini was granted crypto registration by the French watchdog AMF, opening doors for its services in the country. This nod as a virtual asset services provider marks a pivotal moment for Gemini's European expansion. In the coming weeks, French users can expect the full spectrum of Gemini's offerings, including trading over 70 cryptocurrencies on their platform. It's a significant step, allowing retail and institutional clients to dive into the crypto universe. Gillian Lynch, head of EU at Gemini, emphasized the importance of this regulatory approval in France, calling it a significant moment in their European journey. This development showcases Gemini's commitment to providing crypto services with regulatory adherence. It's noteworthy how major US crypto companies facing regulatory pressures at home are turning to the European Union for expansion. Gemini's move aligns with the trend, seeking a balance of regulatory support and clarity in the EU. The approval from the French AMF underscores this strategic shift. The EU's MiCA regulation plays a crucial role in this narrative. Gemini's founders recognized the regulatory support and clarity in Europe during their visit. MiCA, allowing crypto companies to operate seamlessly across EU nations, has become a game changer, shaping the strategy of leading crypto entities. Gemini's choice of Ireland as its European headquarters in 2023 and subsequent expansion aligns with this vision. It mirrors Coinbase's move, making Ireland its primary regulatory hub in the EU. Both exchanges are capitalizing on MiCA, marking a significant paradigm shift in the crypto landscape. Shifting our focus to this one, RBI Governor Shaktikanta Das has some strong words about the ongoing crypto party. Despite the recent approval of Bitcoin ETFs by the US SEC, Das emphasizes the risks these instruments pose, especially for emerging market economies like India. Speaking at the World Economic Forum in Davos, Das expressed reservations about adopting the US approach, highlighting the potential threats to currency and monetary stability. He reminds us that the crypto party had its highs and lows, and the risks, including money laundering and terror financing, are still very real. The RBI governor's outlook on cryptocurrencies remains cautious, as he labels the current situation as very bad for emerging markets. While the global crypto celebration continues, Das urges us to remember the inherent risks and complexities, not just for India, but for economies with similar challenges. Beyond the crypto discourse, Das addressed concerns about food inflation in India. He acknowledged the impact of global supply chain issues and unpredictable weather events on the nation's food inflation. Despite challenges, Das expressed satisfaction with the trajectory of core inflation, providing a nuanced perspective on India's economic landscape. Now, turning our attention to a hacker managed to swipe $3.3 million from Bungee crypto bridge users by exploiting a contract bug. Yes, you heard it right. $3.3 million. Here's the twist. Over 200 wallets lost funds after interacting with Bungee's socket protocol route on Ethereum. The bug, lurking in the underlying technology, triggered the draining of funds at approximately 8:11 p.m. London time on Tuesday. Taylor Melvin, team hospitality lead at Socket, confirmed the incident, stating that wallets with infinite approvals to Socket contracts were affected. The majority of stolen tokens, over $2.9 million, were converted into Ether, while smaller amounts of Polygon's Matic, wrapped Bitcoin, and Ethereum, and MakerDAO's DAI stablecoin are still in the hackers' possession. The good news, Socket acted swiftly. As soon as they noticed the attack, they paused the smart contract being exploited. According to Melvin, the responsible party can no longer cause further damage. Everything is on pause. Now, this incident adds to the list of bridge hacks haunting the DeFi space. The bug, unintentionally deployed by Socket 3 days prior, targeted users who had previously sent tokens via the bungee bridge. The hacker exploited approvals, draining tokens without requiring victims to sign another transaction. Security researcher Officercia emphasizes the need to revoke approvals after such transactions, suggesting it's a good habit to start. These approvals, often set to allow spending higher amounts than needed, can be revoked using websites like revoke.cash. Let's take a moment to explore this. We've got Ripple's CTO, David Jolkatz Schwartz, addressing the community's questions about the XRP ledger's unique Genesis block. The discussion centers around its absence until block 32,569, sparking curiosity and concerns. MetaMan, a vigilant community member, raised doubts, emphasizing transparency's importance to XRP holders. He questioned Schwartz about any other blockchain losing its Genesis block. In response, Schwartz draws parallels with Ethereum's Genesis uncertainty, highlighting that ETH2 doesn't publicly record pre-launch transactions. Schwartz, backing his point, points to a significant 2016 Ethereum transaction of 2,622 ETH worth over $6 million, questioning its origin and the lack of a publicly available record. He emphasizes the arbitrary nature of choosing the Genesis block, shedding light on Ethereum's hidden transactions. Another community member challenges Schwartz, citing Ethereum's 40,000 ETH transactions during its genesis. Schwartz acknowledges the accuracy, but asserts the undisclosed source and a non-public blockchain. He underscores that these decisions, including XRP Ledger's genesis, aim to obscure fund sources. Responding to questions about the 40,000 ETH seemingly appearing out of thin air, Schwartz clarifies that, considering the public blockchain, they did. However, insiders possess more knowledge about Ethereum's situation. Schwartz insists such decisions are arbitrary, serving the purpose of fund source obfuscation. In reaffirming the XRP Ledger's Genesis block, Schwartz verifies its absence of transactions, a deliberate choice. He notes the lost 534 transactions in the initial 32,570 ledgers, maintaining the mysterious nature of the beginning of the XRP ledger. Brace yourselves for this one. Ripple's making waves again, stirring up speculations as it initiates a colossal move. In a surprising transaction, Ripple shifted a whopping 80 million XRP coins, valued at approximately $46.18 million, to an undisclosed wallet. The crypto community is buzzing with anticipation as this significant shift sparks discussions about potential market movements. Tracking this seismic event, Whale Alert confirms the massive transfer, sending shockwaves within the crypto community. Ripple, known for its influential moves, reduced its XRP balance by about 2/3, with a current holding of 46.34 million XRP, valued at around £26.44 million. Speculations are swirling about potential price impacts and heightened market volatility. But that's not all, folks. Another whale in the crypto sea made significant ripples. A massive 25.7 million XRP tokens, equivalent to $14.83 million, swiftly moved from an unknown wallet to Bitstamp. This substantial transfer hints at a looming sell-off, adding more fuel to the speculative fire. Now, turning our attention to Ripple's partner, SBI Holdings, is gearing up for a groundbreaking move on the XRP ledger. Brace yourselves for the buzz around non-fungible tokens, or NFTs, as SBI Holdings plans to issue them for the upcoming XPO 2025 event. And they're not alone in this venture, joining forces with SMBC, Resona, and MUFG. Imagine a digital masterpiece on the XRP ledger, unveiled at the World Expo in 2025. SBI Holdings' plan to release NFTs is considered bullish for the XRP ledger. How? It's all about boosting utility, fostering adoption, and stoking demand for XRP tokens, the native assets of the XRP ledger. The ripple effect doesn't stop there. Bullish developments in Ripple's ecosystem often trigger a ripple of their own, a potential recovery in XRP price. As the digital currency has faced a downward trend since November 2023, this move by SBI Holdings could be the catalyst XRP needs for a turnaround. XPO 2025, a global stage where the XRP ledger takes center spotlight. NFTs issued, partnerships flourishing. It's a crypto spectacle worth watching. SBI Holdings and its collaborators are not just making headlines, they're shaping the future of XRP. Now, before we wrap up, a quick shout out to our loyal listeners. Your support means the world to us. If you enjoy our content, don't forget to subscribe, comment, like, and share with your friends and family. Your engagement keeps the SatoshiBuzz community buzzing. That's a wrap for today's SatoshiBuzz. Until next time, stay crypto cool, my friends.